Every founder eventually runs into the same challenge. Growth costs money. So, whether you're expanding retail distribution, increasing your inventory, funding purchase orders, or investing in marketing, capital becomes one of the most important decisions you'll make as a business owner. But not all funding is created equal. Today's guests bring two unique perspectives on the topic. Dakota has lived the realities of building and growing a CPG brand as the founder of Dog Sauce, while Emily Reeves helps brands navigate financing options and growth capital through her work as VP of Capital Solutions at Bridge. So today, I really want to discuss what growth actually looks like from a founder's perspective, how capital decisions impact a business, and what founders need to understand before taking on debt. Dakota and Emily, welcome.
Hey, Jordan. Really great to be here. Appreciate you taking the time.
Yeah, thank you so much, Jordan. Looking forward to it.
Awesome. So Dakota, I want to start with you. I want to know a little bit more about Dog Sauce. I love the name. I would love for you to describe the product, tell us what it is, and the original vision for the business.
Sure. So Dog Sauce is sweet potato and bone broth gourmet sauce for dogs. The mission was always to bring something to enhance dry kibble and, be a bridge between the raw dog food diets and the hard kibble market that's existing. We want to be an affordable option to just bring excitement to mealtime again. And, in 2020, I set off and knew that it was going to be a long journey before we got to a moment like this. But we started off on Shopify and as an e-commerce business and just, really leaning into the 2026 digital advertising space and made sure that we were growing the business with the first level of a safety net, as I'd like to bring up over and over as we go through this conversation.
I love that. So what did growth look like in those first few years? And I know you say you started on Shopify. Did you find that easy to grow as e-commerce is continue to be a good channel? What did that look like?
I'm so grateful for the tools that we have as entrepreneurs today. I don't think that anything is super, super easy, but those first couple years are proof of concept and making sure that you can get the people around you to believe in the product at that point. You're not a brand or, necessarily a business even. It's making sure that you're solidifying the vision that you have with those around you and getting proof of concept from, starting to be the strangers of the world through e-commerce. And, we lean heavily in creator relationships and what is kind of the frontier of marketing in 2026 and making sure that we're using the right tools. And so I wouldn't say anything's easy, but if you stick it out long enough, things will start, to go your way and you will keep improving every week, which I think is, the most important piece.
Love that. Tell me about the kind of structure of your business between your focus on e-commerce now versus retail.
So at that point, was e-commerce, making sure that the awareness was there. In 2024, fast forward 4 years, we were able to get our first opportunity at Walmart's US Open Call. And that was an incredible experience to go into a room of, truly my biggest goal, getting onto a retailer like that shelves and being able to bring the same quality ingredients we were doing at a small scale, but because of minimum quantities and ordering process economies of scale, we're able to bring that to the masses. And so that was really where the shift happened from, okay, we have a great product. Now, how do we produce it at scale and bring this to the public at scale?
Yeah, I'm curious, was Walmart one of your first big retailers? Were you doing some smaller retail and dabbling in that before?
Yeah, we were in smaller retail, mom and pop shops, but nothing like a mass retailer like Walmart. And so they were a fantastic early and current partner.
So, that's a big jump going from e-commerce and a couple of stores to selling on Walmart. What were some of the biggest kind of cash flow or capital challenges you encountered?
Yeah, initially it's a dream come true when you get the POs from Walmart. And it does allow you to look at that safety net a little bit different because now you're trading purchase orders for things like packaging. Things like fighting for line time become easier because you know what the next 6 or 8 weeks can look like. Now, does that mean that things are all easy from there? Absolutely not. But you have the right tools needed to move forward and execute on a large deal.
That's really exciting. So for you as the business though, what were you kind of looking at? Was there a specific moment when you realized that kind of growth itself was becoming a financial challenge to manage? How did you think about getting the kind of capital to start fulfilling those Walmart orders?
Well, I've always been a bootstrapped entrepreneur, and putting everything I have into the business got me through the first, I would say, oh my goodness moment. And, being able to grow into those initial 1,200 stores in 2024, there's challenges there, but I pushed all my chips in and made sure we got through it. Now, I would say February of this year, and I'm still in it right now, we've gone through hyperscaling and into an additional 3,000 stores or 2,500 stores. And being able to grow at that rate caused a whole lot of new challenges. But that was the moment, I would say in February of this year, understanding I needed to bring on a bigger partner. I needed to, have to give up some equity and bring somebody in or figure something able to accomplish these POs.
So I know this is kind of a big inflection point, and having been a founder myself, understand, right? You can look at, can I raise equity or sell equity in my business to raise money and bring cash in that way? But it's a permanent direction and can change the trajectory of your business as well, depending on how much you bring in. You can also look at financing options, which has costs associated with it, but ultimately results in you maintaining that ownership. How did you think about that decision between raising equity, raising financing, doing both for your dog sauce?
From an investor relations perspective, I have very limited network in that realm. So I've always, waited to get that PO and then had to take on high interest debt that would get me through that bridge, so to speak, to accomplish what I needed to. So what feels like an easy switch to flip as an entrepreneur growing in these moments, and giving up equity feels often like that's the easiest thing to do. And, really proud that we were able to get through these moments and consolidate high interest debt with Bridge. And, that's what got me here. And that's what allowed me to meet Emily. And yeah.
So, tell me about, like, you were kind of had this high interest debt as you were growing. You were looking to kind of consolidate that. How did you find out about Bridge, and how are they helping you scale using that financing?
Yeah. So Bridge was involved in around in the open call scene, and, growing a CPG business at the rates that we are right now, it feels to be a smaller and smaller group of people that get involved. And, I was introduced to Bridge, and the relationship just continued to unfold as we proved ourselves of being able to, be worthy of a great loan at a great rate. And thank goodness everything's panned out the way I could ever dream of.
Yeah, and that's really exciting. So was it around like a particular, I know you said kind of consolidating debt, was it this kind of new store launch of 2,500 stores that you're like, okay, we need to find better financing to be able to support this?
Absolutely. Just ordering ingredients, materials, packaging at that next wave of the business became something that was outside of what I could accomplish with my personal assets and, out of pushing everything back in. So completely needed.
Yeah, that's a very big moment. Emily, you've been waiting and listening patiently, and I'd love to bring you in at this moment to, tell me more about Bridge and the company, and, what you do to help founders accomplish within their business.
Absolutely. So Bridge was founded within Citibank by what I affectionately like to call two recovering bankers who saw that lending for small to medium-sized businesses was broken. And that's actually where we got our corporate partnership with Walmart, was through Citi. We've since spun out of Citi. We still work very closely with them, but we've been standing on our own 2 feet here now for the last 2 years. And we've worked with a ton of Walmart suppliers in helping them find capital to scale within Walmart. And we quickly started to see that a very big missing piece in the market was inventory and purchase order financing. There were limited options that just didn't really fit the needs of Walmart suppliers. So we went out and raised $500 million to serve the needs of Walmart suppliers that are either scaling like Dakota did. It's very easy with Walmart to go from 1,200 stores to 3,000 stores, or launching into Walmart. You get this massive PO from Walmart and all of your cash can't just go to that order. So we've seen a big need in the market, and we're so excited to be able to support Walmart suppliers like we did for Dakota.
Yeah, I absolutely love that. I'm curious, like, what stood out around like Walmart as a partner that might be different than maybe some of the other financing that might be out there for smaller retailers?
Yeah, absolutely. So, there is inventory financing out there in the market, but it all comes with its nuance. It's usually very expensive because you have to think supply and demand. There's maybe 5 or 6 other PO and inventory financing lenders out there. So there's not a lot of competition to drive down that cost of capital. So we wanted to see the cost of capital come down a little bit lower. We wanted to see structures that make sense. Like for us, you don't need to have a PO in hand to get financing. We can go off of forecasts. We can go off of projections because we know there are some suppliers to Walmart who that PO gets issued every week, but your lead time to make goods might take 3 to 6 weeks. So the capital doesn't align with how lenders look at, needing that PO in hand.
Yeah, that's a good point. So tell me about kind of some of the different stages that financing is usually available, because, there's inventory financing, which is usually like when the invoicing due, PO financing, as you mentioned, kind of going off of forecasts. And so talk through that journey a little bit and the implications of kind of when brands can typically get financing and then what Bridge does.
Yeah, absolutely. So Dakota kind of touched on this loan type earlier, where you have these high interest rate loans. They're very easy to get. As soon as you apply for one, your cell phone's probably going to be ringing morning, noon, and night with them offering you a loan and they can get it for you tomorrow. But that comes at a serious cost. Those loans can be anywhere from 30 to 40 to 60% APR. They can get really expensive. And worse than that is the way that those loans are paid back. So those loans are going to be paid back on a weekly basis, sometimes monthly. But man, you get that PO, you're making the goods for weeks, you deliver to Walmart, Walmart doesn't pay you for a couple weeks. Those loans don't meet your cash cycle. And so that's what we really focused on in making this product was, hey, the cost of goods, that order needs to go out 4 weeks before you're even delivering the goods. So you get our cash when you need it for your COGS or your cost of goods. And then once you deliver the goods to Walmart and Walmart pays, that's what pays back. Mismatch of repayment on the loans is so key in navigating things as a founder.
Yeah, I think that was one of the biggest surprises I learned from my own journey as a founder too, is just like how stretched out the cash conversion cycle is from the point where you need to order ingredients and start producing to the point where you finally get the check at the end. And the fact that usually the check is not 100% for a lot of payments that come in after deductions, chargebacks, and everything else. And, they can stretch 3 months to 9 months in some cases for brands. And so it's important to have that capital and financing in place. I'm curious, when Bridge is evaluating a brand, what separates companies that kind of are ready for financing and those who are not?
I would say this, especially in CPG, it takes a lot of cash to start something. A service business, you're going to go clean up Airbnbs, you need to buy some cleaning goods, maybe pay your staff once you get paid. Pretty low capital intensive. When it comes to goods, you need to have a little bit of a treasure chest going into things. When we look at brands, we're looking at, have you sold these goods before? Like for Dakota's case, he'd sold them on Shopify. He understood how the product sells. He understood who his customer was. He understood what it takes to make these goods. We look to see, maybe have you sold to smaller retailers before? Or alternatively, if you haven't, do you have a background in this? We're working with a company right now where she's one of the sharpest founders I've met. She's worked in beverage, her whole career. She's slowly starting to launch and she has POs from retailers, as she should. It's a great product and she knows what she's doing, but she hasn't really sold the goods before. But we understand that she understands her numbers, she understands her financials, and she understands what goes into scaling a brand. So we want to see that someone kind of knows what they're doing. They've done it before in some capacity, and that helps us, get things over the finish line.
One thing about Bridge is you have this close relationship with Walmart, Sam's Clubs to be able to help founders grow within those businesses. If a founder is expecting that they'll need capital within the next 12 months or so, what should they be doing today to put themselves in the strongest position
I would
possible?
say start to look at debt sooner than later. It doesn't cost you anything to have a conversation. So start to learn about what lenders are looking for. I can talk to a founder and say, look, you're looking 12 months out. Let's think about these things. Let's think about, where you're spending your cash, how you're going to scale. There will be people who, they're going to want to, and I understand what they're doing, where they're saying, look, I want to buy, 60,000 units in preparation for this order. And the reason they're doing that is because their costs with their manufacturers are lower. They have no idea what that order is actually going to be. So they're buying a ton of inventory, not knowing what's going to be sold, and talking through the implications of that with a lender. Because a lender isn't going to just say, oh, good, you're going to improve your margins, we'll give you a bunch of money and hope it sells. There needs to be some line of sight into what those numbers are going to be and what the sales are going to be. So that's something that I think is important to understand, that, hey, no one's just going to buy your inventory and let it sit there. They're going to want to see that there's, some type of commitment from retailers. There's some idea of store count, even if you might have to order a lower amount from your suppliers and your margins might get compressed a little bit. Wait until you have some kind of confirmation from retailers before you start going out and confirming things with your co-man.
Yeah, I think that's really important. And I think, talk with me about how founders should think about PO and financing and invoice financing, even if they might have equity investments as well, because there's some things you can get finance, right? And it might be a cheaper source of capital over the long term than giving up equity in your business. And so it's not just like, do I sell equity or do I get financing? I like to think about it in terms of like a financing stack that you can start building up for different parts of the business.
You teed it up for me here, Jordan. I always say this: get debt for the things you can get debt for. So don't dilute yourself, because equity is always going to be the most expensive money you take. So if you can get a loan to buy your inventory, do that. take on the debt, maybe give up a little bit of margin to finance it, but preserve as much equity as you can. Or if you're going to give up equity, that's okay, but use it for things that you can't get financed. Maybe your marketing costs, maybe hiring a new sales manager or bringing on a broker. You can't get debt for that, but you can certainly get debt to buy your inventory.
Yeah, I think that's so important, especially usually for debt products, right? You can use it for the initial launch, or you can just build that into your growth plan so that you always have that cash coming in and making that available, which is
Absolutely.
important.
And to that point, we built this really closely with Walmart, but it's not exclusive. So we're able to finance, any inventory or PO financing needs with larger retailers. We just deeply understand selling into big box retail because of our close relationship with Walmart.
I know a lot of founders will be applying for Walmart open calls and other events throughout the year. How should they think about timing from getting connected with a financing company like Bridge, kind of before even having those conversations? Does it help having kind of going in there, being able to pitch your product and saying that we have a process of, actually building and delivering the product kind of for
Yeah,
those
I think
meetings?
Dakota and I can both answer this. I've been to quite a few open calls now, and you go to open call, but that PO, you're still, if you get that golden ticket, you're still onboarding. And I think Dakota calls it the University of Walmart. There's still a ton to learn. There's still a ton to get set up. That can take months. And so you get that golden ticket. It doesn't mean you're going to be on shelves in the next couple of weeks. So it's always great to have a call with the lender to kind of think about, hey, how should I think about financing this? Can I use debt to maybe finance my other customers to free up cash for other things? And then, because we work so closely with Walmart, we understand that supplier experience and can kind of give guidance on, hey, this is what you can expect over the next couple of months. But Dakota can certainly speak on that as well.
Yeah, I would just say that oftentimes you'll be walking out of your meeting with your merchant with a rough understanding of what the next 6 months could look like. And I don't think that there's any harm of building a relationship with Bridge or a lender earlier on and letting them know this is where I'm at. And this is what I have been told. As soon as you do have purchase orders coming through, that's really when everything can move quite quickly. And I do think, being set up before that and everybody understanding where your business is, what your lead times are a big advantage to needing to move quickly when the moment
Yeah,
comes.
your relationship with your lender is going to be key to your success. So start that sooner. Always be proactive about financing, not reactive.
I love that. And then Dakota, I'd love to know from your experience, kind of where you are now, what advice would you give the founders about kind of preparing for that growth, and especially from the financial side, based on that experience of, bootstrapping, maybe potential equity raising, financing? What have you kind of learned, and kind of what would you tell founders?
Well, it would be hard for me to give good advice about, raising equity just because I haven't necessarily been in that position. I do think that it works really well for a lot of founders and can help get you through a lot of the things that I've had to learn on my own. Now, I will say, going through more of a bootstrap mentality, I would always slowly raise or, pull from assets that you have or do anything you can putting into the business when you already know product is sold. Again, that means a purchase order is in hand, a relationship with the new store chain is on the horizon. Just simple ways that you're able to understand, okay, I'm going to put this much into the business and it's going to print out this much. And, being able to understand your runway and what you're spending monthly factored in, you can see where you're at pretty quickly. So, my advice to my friends and people looking to start a business and anything in product is moving slowly is okay. Time is absolutely something that's on your side when you've put in the work and you put in the time to show up to these things. So that's kind of going back to slowly raising that safety net. It gets a little scarier every time that you unclip your carabiners and go a little bit higher, but you are higher. So I think
Yeah.
that, doing that slowly really compounds, and you may get a big break like we did, but still we had to prove out processes and operations for 4.5, 5 years before that really came to fruition.
Yeah, and also shows that you don't have to sell a large chunk of your business to grow within larger retailers. There are ways that you can do it, as you mentioned, by taking that slower, not too slow, right? Like it hasn't been decades, but like a slower growth path
That's
or
right.
more thoughtful growth path to get to where you are, and it sets you up to go to what's next.
That's right. Just not expecting immediate satisfaction from starting something. But I like that you say that. It is not a 3 decades long thing that I've gotten involved in, but it absolutely is keeping the head down and working through the right amount of time. So.
I love that. So, Dakota, what's next for Dog Sauce, and how is your approach to growth kind of compared to when you started?
I would say the mission is still pretty similar. It's build out the best systems and operations that we can so we can make unbelievable products at great prices. Dog Sauce has a lot of different verticals that we need to execute on and continue to solve existing problems in pet nutrition and diets that I feel we can do through kind of and being able to be the leader in that space. And that comes down to perfecting our systems and building out some of the best equipment in the country to make more US jobs. And, hopefully I can look back in 10 years and put anything in a pouch as good as anybody. And to me, that's what is super important in my mission that we're on from the beginning, but starting to get closer to now.
I love that, Dakota. Thanks for sharing. Excited to follow along with your journey. And then, Emily, as we wrap up, what's one thing that you want our audience to know about Bridge and how you can help
Yeah,
them grow?
absolutely. The debt isn't scary, and but not all debt is created the same. So certainly take your time, explore loan products that are out there, get a feel for the market, and again, just be proactive, not reactive. So it's never too soon to start that conversation, to start to build a relationship with a lender, having someone that you feel comfortable asking questions about, what to expect in that loan process. Like you'll get a really good feel for the people that you want to work with.
I love that. That's so key. Emily, Dakota, thanks so much for being on and for joining today and for sharing your story. If you are curious about how to get financing for your CPG brand, definitely reach out to me. Happy to connect you with Bridge. I'll put the info in the show notes. And with that, good luck on your growth journey. Thanks, everyone.
Thank you.